welcome to a brand new episode of Daily Finance Wrap. This is your daily dose of everything to do with personal finance, how to get your investments right, how to manage your taxes properly, or how to even ensure that you're managing your loans and EMIs effectively. I'm Mubina Kapasi, and on the show, we get you also the top stories that may directly or indirectly impact your money. All the important news that you should know about as another day comes to an end. And of course, we will be bringing on board our guest experts to talk about different aspects of personal finance. The topic that we're going to talk about today is with respect to gold. Now, it is something that's near and dear to most of our hearts. We all have gold left behind from our ancestors. But now, of course, as a younger generation, we want to invest in gold in more modern ways. What are these ways? How should you be investing in gold? And also purely from an investment perspective, how much gold should you really be having in your portfolio? And what are the reasons, of course, behind this crazy frenzy in gold prices? 70, 75, 77,000 for the precious metal. We'll be discussing all of this and more with a very special guest expert. But as always, let's first kickstart the show by bringing you the top stories at this hour. First up, some news from the mutual funds world. Mirae Asset Mutual Fund has warned against fake accounts that are cropping up through a public caution notice. Now, it has mentioned that there is apparently a fake or a fraudulent WhatsApp account that has been created, and it is impersonating and using the photo as a profile picture of Mr. Swaroop Mohanty, who is essentially the Vice Chairman and the CEO of Mirae Asset Investment Managers India. This, of course, purportedly to solicit investments. Now, we've been hearing a lot about deep fake videos, etc., but this is, of course, a fraud as well that one must be careful about. Mr. Mohanty and, maybe other investment biggies who are well-known faces, who the public may trust as well. These photos are being used for such purposes. And this, of course, is in public interest, where Mirae Asset Management has warned that this is a fake account and Mr. Mohanty has not gone about soliciting any sort of investment or providing any kind of investment, and one must be wary. So for all the viewers who may have got such messages from WhatsApp, please ignore them and, of course, stay safe, from such fraudulent activities. Well, in other news, the Finance Ministry has notified rules and procedures to be followed if a GST taxpayer wants to apply for a waiver of interest and penalty. Now, what exactly is this? Remember that there was this amnesty scheme that was introduced, and it was effective from the 1st of November 2024. Now, today there are certain rules that have come about. For example, what is the amount you need to pay down? What is the deadline by which you need to pay it to be allowed this amnesty? And more importantly, this is only for non-fraudulent taxpayers. Many entrepreneurs, when GST was first introduced, did of course find it a bit difficult to comply with all of the rules, naturally so, because it was new territory. So understanding that, the Finance Ministry has introduced this amnesty scheme, and I believe that all the small businessmen watching who are GST payers may find this extremely useful. So it's a very welcome step indeed, as especially for people who had to comply with the GST rules during that initial period. There was a plethora of demands as well that has been raised. And coupled with that 18% interest and penalty, the demands of the default had become quite significant. So this move is definitely a big relief to the taxpayers. And of course, all small businesses out there, entrepreneurs, must be in touch with their advisors and their tax advisors on how to proceed with this. Meanwhile, in other news, we had IT bellwether Tata Consultancy Services, or TCS, which has released their numbers. Well, the profit after tax figure, or the bottom line, has missed street expectations. It has come in at around 11,900 crore rupees. The revenues have come in at around 64,250 crore rupees. Remember, the brokerages largely were expecting the profit figure to come in at around 12,200 odd crores. So it's quite a miss actually for the IT vertical. But the management has said that we saw the cautious trends of the last few quarters, that recovery of sorts that continue to play out in this quarter as well. Remember that for most of these IT players, the BFSI sector are very big clients. So the main thing was that, are they seeing a recovery in the BFSI sector? Well, the answer is yes. The management had said that amidst all of the uncertainty and the geopolitical situation, the BFSI vertical, their biggest one, did show very good signs of recovery, and they also saw strong performance in their growth markets. That was the word coming in from the CEO and MD. In other numbers, they had their operating margin, which came in at 24.1%, slightly lower than 24.7% in the previous quarter, and they added around 5,700 employees during the quarter. That's TCS for you, and very soon we'll be having all these big companies release their second quarter numbers. Stay tuned to Daily Finance Wrap as we will encapsulate them for you. In terms of market news then, and yes, we did end in the green after yesterday, but we failed to hold that intraday high for the equity market. So by the end of the day, the market had very marginal gains left. The Nifty was higher by about 0.07%, pardon me, and the Sensex higher by about 144 points, or 0.18%. So we failed to hold on to that 25,000 mark for the Nifty, and we mostly saw gains in metals and in the banking stocks. So that, of course, are some of the top stories at this hour and in terms of financial news. Now, let's kickstart the show by talking about the topic that we have lined up for you today, and that is with respect to gold. Like I said, we all have exposure to gold in some way or the other. It may be in the form of ancestral jewelry, it may be in the form of that Shagunka coin, which most of us get during important occasions, and of course, for more modern investors, we may have purchased sovereign gold bonds, gold ETFs, etc. Now, don't be worried if you don't know what these terms mean, because in just the next couple of minutes, we are going to simplify all of these terms for you with the help of our guest expert for today. Welcoming on board Kanika Kapur, the founder and chief investment strategist with Spin Wealth. Hi, Kanika, and it's a pleasure having you with us today on Daily Finance Wrap. Before I delve into the whole investment aspect of gold, I want to talk about this rally that we are seeing in gold prices. I think it started off in COVID and there's been no looking back. 77,000. Could you help our viewers understand why gold is rallying so much?
It would be simple. First, let me thank you for having me here, Mubina. It would be simple to say that, like the equity markets in India witnessed volatility. And because of that, gold rallied, because gold is seen as a safe asset, because there was a lot of movement of money from India to China as they saw attractive valuations there of global money. But, honestly, there is a much larger global narrative to this. This rally started back in 2022. In February 2022, when Russia invaded Ukraine, that is when the love story of the central banks began with the metal gold. Because, there were geopolitical jitters and, it's very difficult to predict the rain. But what you can do is build arcs. And that's exactly what all the central banks globally did. They started fortifying their reserves with gold. So between the second quarter and the fourth quarter of 2022, their purchase of gold went up 5 times. And that is what actually led to this gold rally. And even the recent, like Iran, Israel, geopolitical jitters that are happening, the strife, the tension between them, that has just further fueled the rally. It's just about, more than anything else, the geopolitical jitters and the central banks wanting to fortify their reserves.
So we see gold as a safe haven of sorts, because when everything's going wrong in the world, you want to just stick with gold. And I think even central banks around the world are kind of doing the same thing in many ways, and that's something that's causing gold prices to go up to such massively high levels. Could you provide your perspective on the potential of gold as a household asset? It practically is a household asset, at this point. But still, what sort of potential do you see there?
At this stage, that's $1 million question. That is $1 million question because gold has rallied so much in the past 2 years. Like in the past 2 years itself, which it has gone up 45%, which is very, very unlike gold, right? So the thing is, like, as everybody owns gold, as you said, and everyone's talking about it, and the optimism surrounding gold as an asset, I would worry. As Warren Buffett says, like, be fearful when others are greedy and greedy when others are fearful. So that is a cause for worry. But on the other hand, we wake up every day to news of some countries striking some other country in the Middle East, and there are geopolitical jitters everywhere. And, when all is not well, you do want a safe asset in your portfolio. You do want to buy more of gold because gold is considered to be a safe haven. And that is why, we all want to purchase gold at this point in time. But my perspective on it is that the best way out, the secret ingredient would be to have a completely balanced portfolio at this point in time. Have equity, have debt, but also sprinkle in a little bit of gold into it, because don't put all your eggs in one basket. And as long as you do that and you have a well-balanced portfolio, you're in a good position. So use it very boldly, use it positively, but at the same time, view gold very judiciously as well at this point after the rally.
Understood. Okay. So yes, gold should be sprinkled in your portfolio. That's a given, considering, the role it plays in the portfolio. But now the question is how. So Kanika, most of us do have some semblance of gold lying at our homes or maybe in bank lockers. It's mostly physical. It's in the form of jewelry. Can I consider that to be my part of investment in my portfolio?
All of us Indian women get so emotionally attached to our gold jewelry that we sometimes forget that our gold jewelry has a sneaky thief to it, okay? And those are the making charges. Those are the making charges, and they considerably reduce returns. At this point, Mubina, I want to ask you a question, okay? If Nifty 50 tomorrow corrects by like 10%, would you be tempted to buy it? Would you want to invest into it? Would you want to buy it?
Yes.
Okay, if the only money you had was your gold jewelry, would you ever sell it to buy Nifty 50?
No.
So then how do we consider that as part of a portfolio? Because I do remember during COVID, I had like gold index funds, right? And when equity markets corrected, and gold was at its highest point, I sold the gold index fund and bought into equity. So that is the advantage of digital gold vis-a-vis like jewelry.
So the fact that I'm not going to get up and sell my jewelry just because the Nifty has corrected 10% and I don't have free cash means that the jewelry is not considered to be a part of your investment portfolio. And if it's got emotional value attached, I shouldn't consider it as saying that, hey, this is my portfolio. Is that right?
I wouldn't consider it as a part of your core portfolio. What I would look at it as is like a contingency fund, an emergency fund. For generations and for decades, we've heard even our ancestors tell us that, okay, when times got tough, gold became the superhero. They sold gold and they fed us. They fed our family, right? Especially in times like when India got its independence. And I remember my grandmom telling me that she came to Bombay and she didn't even have money to deliver her child, and she sold all her gold jewelry to feed her children at that point in time. So gold is more like a contingency fund, an emergency fund, which you go to. It's like a superhero in really tough times, like in COVID pandemic. But I wouldn't consider it as part of your core portfolio, which can help you create wealth in the long run, the gold jewelry part of it. Yes.
Hmm. Understood. Very well put. And yeah, I mean, it's a good emergency fund. I guess it's a good safety net as well, especially for women. So tell me then, Kanika, if we have to invest in gold today, add it to our portfolio, what are the different methods that are available to us?
Okay, so I think one of the methods, as you mentioned, is sovereign gold bonds, and that is because sovereign gold bonds come with the added advantage of interest every year. Okay, the government of India gives us interest every year if you buy sovereign gold bonds, and so it's like having your cake and eating it too. And plus, at the end of the tenure, when the bonds mature, we also don't have to pay capital gains tax. So because of these advantages, so sovereign gold bonds are a very attractive option. An investor's dream, a trader's dream would be gold index funds and ETFs, simply because of their liquidity and ease of access. At any given point in time, gold goes up, you can sell them. Gold goes down, you can buy them. It's extremely easy. It's liquid, and I don't think there's a better alternative than that for an investor or a trader to add it to their portfolio. Another alternative is fund of funds. Like there are multi-asset allocation funds. There are also fund of funds which invest into gold and also invest into something else. So they build a good diversified portfolio, and you get indirect investment into gold as well.
So there's sovereign gold bonds, there's gold mutual funds, there's gold fund of funds. Tell us some of the advantages that these have over jewelry pieces, Kanika.
So as I mentioned, jewelry, the biggest issue is like the making charges. Okay, that really reduces your returns. That's the sneaky thief. The other thing about physical gold is their storage costs. Okay, you need to store it in a safe place, so maybe a locker, a vault, something like that, and then you have to pay those rental charges for the locker or vault. The other thing is the conversion cost. When you go to liquidate physical gold, there will be some bit of loss as far as converting that to cash is concerned. So those are the biggest disadvantage I see. And like, why? Why would you want to reduce your returns when you can actually use gold as a golden ticket to financial freedom and wealth creation?
Very well put. The golden tickets to financial freedom is gold. And yeah, I mean, when you use jewelry and things like that, there are certain making charges that come in. Not to mention, of course, the risk of impurities in gold in that form, the risk of theft, which is, of course, ever prevalent. When it's gold in the form of sovereign gold bonds or, any other digital gold schemes like mutual funds and FOS, at least you don't need to worry about things like theft and impurity because it's lying in your demat account and nobody can really pluck it out of your demat account and steal it, So there's that level of security.
You can sell it and buy whenever it's liquid, easy access. Yeah, it's like investor's thing, as I said.
Okay. So you mentioned in one of your answers that you should have a balanced portfolio. So it's not to say that only equities or only debt or only gold. There should be a good balance. So tell me then, Kanika, what percentage should an average investor keep in the form of gold in their core portfolio?
I wouldn't put it down to 1%. I would say it depends on, the investment goals and the asset allocation of any investor. And it changes from investor to investor. Like, for instance, you could take a broad range of 5 to 15%. For a conservative investor, he would probably be comfortable with 15% invested into gold. And an aggressive investor would probably just want around 5% invested into gold. So it just totally depends on the risk profile and the investment goals and the ideal asset allocation for that investor per se. I always say, like any balanced portfolio should be customized to you and should never be standardized.
Hmm. Yeah, very true. I mean, everybody's risk profile is different. Everybody's goals and objectives are different. For example, perhaps if you are younger and you have a lot of time in your hands to achieve your goals for which you're investing and creating a portfolio, maybe you can lower the amount of gold that you keep in your
Yes,
portfolio.
absolutely. Absolutely. You can lower the amount of gold because equities will compound over the long run. You can take more risks because you yet have a lot more earning years ahead of you. So maybe you don't want to you can be more aggressive in your portfolio. So you can lower the amount of gold in your portfolio. Definitely.
Kanika, I want to know that in a world where there is inflation, and I think for the foreseeable future, inflation is the reality of our life. Things that used to cost X even 5 years ago now cost X plus 50%, 60%. So it's the reality of life. Do you think gold can sort of help keeping our purchasing power of money intact?
Yes, I think gold is the best inflation hedge we generally put into our portfolios. That is the basic reason why we add it to our portfolios. It is a very, very stabilizing asset. And we witnessed that firsthand during the COVID pandemic. Other assets all wobbled, everything corrected, but not gold. Gold went up. So gold is that superhero which will come save you in really tough times. And gold is an inflation hedge. So while other assets will wobble and lose value over time, gold doesn't lose value over time. So it is a wonderful inflation hedge. And, because of that, like our portfolio stabilizes and it reduces the risk of the entire portfolio. So I would say yes, definitely. I have seen in the past few years that no matter what, gold doesn't lose value over time. The cash lying in your bank account will lose value over time, but not gold. The gold is
Yeah,
definitely
absolutely. Yeah, absolutely. And we've seen that happen, right? I mean, gold from 30 and 40K has now doubled almost, to 77K these last couple of years.
I was seeing the last couple of years has gone up 45%, and the last year itself has gone up 30% nearly.
Yeah,
Which
there we go.
Which is very, very good. It's very sparkly. It's very shiny right now.
And mercifully, that figure is much higher than inflation. So, if you just put your money in gold, you would have definitely preserved the purchasing power and made some good money, or what we call as, real and nominal.
Absolutely. Some of the tranches of the sovereign gold bonds, which have come out in the past few years, have actually delivered returns higher than the Nifty.
Wow.
Because because equity as an asset class, there are good years and there are bad years.
Yeah.
But for gold, it's always more or less standardized. Yeah. So there have been readings and there have been studies that show that few tranches of the sovereign gold bonds have delivered better than the Nifty.
Well, we're having this conversation, Kanika, at just before the festive season, when I'm expecting that a lot of our viewers will be going out there and buying gold. So maybe buy that little coin and buy those few trinkets of gold for good luck, but also then consider all of these digital forms of gold that Kanika has mentioned, and I'm sure your portfolio will thank you for it. But, we also take on board viewer questions and queries, and I think we've got quite a few of them. Remember, folks, that if you would like to ask Kanika any question, you can just comment in our YouTube live box right there, and we'll get Kanika to answer. So let's take on some of those questions. Preetham Das has asked that with gold prices rising, how much of my portfolio should be allocated to gold for long-term stability? So here, Kanika, I guess we can presume that Preetham does have a good amount of time on his hands. What do you recommend?
If he has a good amount of time in his hands, I would just stick to what you had decided. 5%, 10% is enough. You can dedicate the rest to equity, debt, because maybe in the short run, equity will be volatile, but over the long run, equity will compound and give you the best of returns. And I always say, equity mutual funds is like planting a money plant. Over a period of time, it will blossom. So you do sprinkle gold into your portfolio to add the stability, to add the safety net, to add the inflation hedge. But if he has a long-term horizon, a 5% max, 10% should be enough.
Understood. Okay. Ro is asking a question and a very relevant one. He says, with the current market volatility, do you think now is a good time to switch some of my investments from equities to gold? I'm sure, Kanika, with what we are seeing in the markets these last couple of days, you must have got several such calls from your clients as well that, what's happening? Should we shuffle our portfolio? Should we move out a little bit from equity, so on and so forth? So I think this is a blanket question or a blanket answer perhaps to everybody. What's your view on this?
So the thing is that I understand everyone's jitters. I understand that with the volatility in the markets, which had dipped a little bit, but today we've done well again. I can understand the jitters of wanting to embrace gold, which is considered a safe asset. But at this point in time, it's important to keep in mind that gold has already rallied a lot in the past 2 years. It has already rallied 45%. So adding gold at these prices should be done very judiciously. I would say that stick to the percentage you've decided to put into your portfolio. If you've decided to stick to 5%, let it be at 5%. If you've decided to stick to 15%, let it be at 15%. The key out here, the secret to success out here at this moment is an ideal asset allocation. It's always better to revert to that in uncertain times.
So I think once you have said that, okay, this is the reason why I'm investing, this is my risk profile, and you've sorted out with the help, of Kanika and other financial advisors that, look, this is what's the ideal ratio, you shouldn't really tweak it too much because it's a well thought out plan. Yeah.
Yes.
But just
it's long term as well, right? We're not investing for the short term.
Yeah, exactly. And in fact, when you're quietly sitting down, you've penciled in all your thoughts is when you're in a calm mind, as opposed to when the market is volatile and sometimes you're not in control of your emotions, and that's the worst time to be making decisions. But as a follow-up to that, we have a question from one of our viewers. He says, as the market recovers, should I rebalance my portfolio? Which is a good question, Kanika, because sometimes as the market moves, our allocation also changes. So at what point should one consider then, rebalancing it again?
See, tactical calls do create a lot of alpha, but there is not one certain point in which you have to consider rebalancing. It's as and when pockets of opportunity arise. I am not saying, I would say it is a good idea to rebalance your portfolio as and when prices of different asset classes move, but do be very clear on which pockets of opportunity are you looking for and what is your target price for those pockets of opportunity. It is always a good idea to rebalance your portfolio, but be very judicious as far as your target price and which pocket of opportunity are you looking at.
Understood. Okay, all right. I think that brings us to the end of the segment. Kanika, it's been a great conversation with you, a very insightful one, and I hope all of our viewers as well have benefited from all the wisdom that you've imparted for us today. Thank you so much once again.
Thank you. It was a lovely evening. Thank you for having me, Mubina.
All right. Well, that was Kanika Kapur talking to us about gold, about creating a good financial plan, sticking to it, and of course, how gold plays a role in your investment portfolio. And with that, we have come to the end of this episode of Daily Finance Wrap. Thank you so much for watching, and don't forget, if you would like to ask our guest experts any question with respect to investing, please do jot it down right there on the comment box below. Until then, goodbye.